Welcome back. Well, as promised, let's take the conversation forward with Sharan Bansal of Skipper joining us on the show. The stock is definitely flying away in the trading session. If I have it right, it should be locked in upper circuit, 20% higher, and that's because the company has managed to show a stellar growth this time around as well. It's 33% growth on the top line, and they're talking about a 25% CAGR growth over the next 2 to 3 years, at least in the medium term. But Sharan, I wanted to kind of zoom out a bit and discuss with you something that Ajay and me were discussing in the break about the visibility going forward, because what I understand from Power Grid and the other transmission companies, the overall ordering seems to be peaking out a bit. Even if you look at Power Grid's capex number, etc., is that A, the right assessment? And secondly, for you, where the growth will come from? Is it going to be exports then?
Hi. In terms of demand outlook, I can tell you that our primary focus continues to be international markets. We have been saying that for last several quarters now, and we have got excellent success in a number of countries where, thanks to renewable investments, a lot of investments are taking place in transmission grids. So we are seeing very good opportunities in not just developing economies, but also more and more developed economies as well. Countries like North America, USA, Canada, Australia, and even some European countries we are seeing traction from. So, of course, the long-term story continues to be on the international side. Having said that, we are pleasantly surprised by the rebound that's taking place in the domestic transmission and distribution space presently. It could be a combination of a couple of factors. Of course, the integration of 500 gigawatts of renewable power, which the CEA came out with the plan back in December 2022, just about 8 months ago. That some of that we are seeing translated into ordering now, and also the recent Supreme Court verdict clearing the Great Indian Bustard issue, which was also holding up a lot of projects ordering. So I think that has led to a bunching of several tenders presently. So I'd say that on the domestic side, we should continue to be pleasantly surprised. However, the long-term focus of the company will continue to remain exports, and we see enough opportunities for out there to maintain our momentum of 25% CAGR growth over the next 3 years.
Sharan, I want to understand from you a little more on the export side. Where exactly, what kind of inquiries, order flow inquiries are there on the table? Especially for your engineering division for FY25, what kind of numbers are you aiming based on that inquiry?
Of course, like I mentioned, we are seeing a lot of investments into T&D networks thanks to the push on renewable side. So the inquiries are not just from developing economies. We are seeing very, very good inquiries from North America, from, and obviously newer geographies within the developing economies as well, like North Africa and Middle East. So I'd say that overall, our current export order book, which is about 25%, we do have a target to increase that share in our order book. Thanks to the domestic orders that have come in recently, that share has dropped down slightly. However, long term, we don't see a challenge within FY25 for that share to go back up to 50% again.
Sharan, I understand that there is the company is planning to issue some shares to promoters on preferential basis. Can you tell us a little more about that? How much money are promoters looking at infusing in that manner?
Essentially, the company is looking to enhance the equity base. The board is yet to take a final call, whether that will be through preferential warrants or through rights issue, etc. We have a meeting scheduled on the 16th, which is day after tomorrow, to take a final decision on that matter. So it could be a combination of both or one of the two. We will be able to share details on that after the 16th board meeting.
Okay. Sharan, before we let you go, one last word. You've given us visibility on business growth and opportunity size. What about earnings in terms of margins? Is there visibility of your engineering division margins going back to 15-16% or slightly higher? Do you have levers to manage that kind of number?
We have always guided for engineering margins of between 12 to 13%. We maintain that that is quite comfortable with the current order book that we have. Definitely with the increase of exports in our order book, we can hope for those margins to go up further. as well as with the improved demand scenario, we are in a situation now to pick and choose better quality orders. So yes, there definitely will be opportunities for margin expansion as we go forward.
Okay, so there's opportunity for margin expansion, record order inflows, 25% CAGR over the next 3 years with a focus clearly on international business. Sharan, everything seems to be working right, and so is the stock price as well, and I think that's the reason the promoters are also looking at upping their stake. We let you go on that note, Sharan, thank you so much for joining us today, but